It's about that time of day again. My name is Joseph. Wednesday evening, November 7th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. And tonight, we're covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude is bearish with a triangle pattern tonight, and that tells me to focus on buyer failures, and I've got my eyes on those swings or those pivots up around the high of the range tomorrow morning. The S&P is bullish with a strong run higher, and that tells me to keep my eyes open for a spike in range pattern going into tomorrow's session, which means we're going to focus on those two try-failure patterns for buying opportunities tomorrow morning. The Nasdaq is also bullish, a little bit different than the S&P, very obvious wedge pattern, and as that wedge gets narrower here tonight, we're waiting patiently for that deep pullback, which may be the biggest opportunity we've had all week on the Nasdaq tomorrow. And how about gold? Gold is bearish with a spike in channel pattern tonight, and that tells me to look for selling opportunities using those buyer failure patterns up around the highs of the range. Got a very important chart to look at tonight on gold, so make sure you stay tuned for that. And of course, we'll wrap up tonight on the euro. Euro is bearish with a collapse off the high, and that tells me to look for selling opportunities at the high of a hidden channel for Thursday morning. Boy, speaking of Thursday morning, we are now out of the election. Huge reactions, obviously, as we expected. Got some ranges. We got some real strong trends. And typically what happens is that day after a big event, whether it be a news event or election like we had yesterday, usually a little bit crazy. And the following day is usually where you get all the big opportunities, right? So the big reaction's probably coming tomorrow. And as always, I've got a great plan of attack for you guys and gals tonight on the newsletter. Before we jump into the video, though, and put the plan together for Thursday's session, I need to remind you, if you're watching me this evening right on YouTube, you can find a detailed description of this entire strategy. It's written out right here on my blog at Sideways Markets. I'll leave all the links in the description of this video. Also, if you have any questions about anything covered in this video tonight, please remember you can post those questions in the comment section below. And if you like what you see, please help support this channel by subscribing. And when you subscribe, hit that little bell icon so you get notified every time I post another video. And don't forget, if your goal is to become a consistently profitable trader, you can get your transformation started by joining our mailing list. All I need is your name and your email address. Hit that submit button, and I'll send you an email every time we publish something new. And also, don't forget, you can also download all the charts from tonight's video. That's right, they're ready for download. That way you can have them on your computer for tomorrow. If you're not with me tomorrow morning in the trade room, make sure you use those charts. There's a big button right below the video tonight on our blog, and that'll give you the information you need to download all those charts. Any help you need, don't forget, you can always call a toll-free number or use that live support tool in the upper right-hand corner. So don't be afraid to pick up the phone and call me anytime. I look forward to helping you out every step of the way. Speaking of every step of the way, let's get started. We got a lot to cover tonight. It's Wednesday evening. We got the last half of the week coming right around the corner. Speaking of that, what's on the schedule for tomorrow? Tomorrow's Thursday, November the 8th. What do we got here for tomorrow? All right, so we've got the couple news events here tonight. We got the first of all, we do have some news coming out overnight from China. So if you'll be trading the overnight Asian session, be aware, 10 o'clock Eastern time. Anytime you see Red Star news events late at night from China, we always want to make sure you're aware. If you are trading in Asia overnight, right, be aware of that. That's probably going to get things moving here in the overnight Asian session. Major news tomorrow, we've got the jobless claims number at 8:30, right, if you're with me tomorrow morning in the U.S. session. And then, of course, we got the FOMC meeting announcement tomorrow. That's at 2 o'clock Eastern time. That is going to be the big headline number for tomorrow. Whenever I see the FOMC announcement, 2 o'clock Eastern time, I always know I've really got to make my money in the morning session tomorrow morning. Yeah, you can try to play around with it after the news comes out tomorrow afternoon, but I will give you my best advice, and that is make your money in the morning before the afternoon on Fed Day, because when that news comes out at 2 o'clock, it's oftentimes extremely irrational, illiquid, difficult to trade. It's a gambler's market right after that news comes out tomorrow, and it's probably going to be a pretty violent reaction tomorrow because everyone's leaning in right now, trying to figure out, are they going to raise rates in December? We don't quite know yet, and we're hoping tomorrow is going to give people a little bit of a taste of what to expect into the end of the year. So tomorrow's Fed Day, right? We call it Fed Day. Fed Day, 2 o'clock Eastern Time is the announcement. Make your money before lunchtime. That's where the most reliable trades will be tomorrow morning. And then after that news comes out, be very, very careful because it's usually quite volatile, it's usually quite violent, and it's very unpredictable and unreliable. So be careful after that news comes out. If you're wondering the best way to trade the FOMC announcement, come back the following day and trade the reaction on Friday. That's where professionals are going to trade it. It's just rookies and gamblers trading after the news tomorrow afternoon. If you want to trade with all professionals, come back the following day. That's where it's going to be a lot easier to make your money. So tomorrow morning before lunch, right, 11:30, 11:15, 11:30, before lunch, skip lunch, skip of course, the news event, come back the following day, right? And of course, we'll talk more about the plan for Friday in tomorrow night's newsletter. And then, of course, tomorrow night, we also have some more news from our friends in China at 8:30 Eastern Time. So really, the only two big news events you're going to worry about are if you're trading in Asia, 10 o'clock tonight, right? Merchandise trade from China. And of course, tomorrow, you get the FOMC announcement at 2 o'clock Eastern Time, which tells you get there early, make that money early. And of course, we're going to have a front row seat for this action. We open up our trade room every morning at 8 o'clock Eastern Time. And of course, you can find more information right on our website. Speaking of which, let's get this party rolling here. Opening bell tomorrow morning is right around the corner, and I want to make sure we are ready. Going over the plan tonight, we got crude oil, S&P, Nasdaq, gold, and of course, we'll wrap up tonight on the mighty euro. Starting off with oil tonight, crude is bearish with a range and a hidden channel on the chart this evening. The bears have the momentum, and that tells me to look for selling opportunities up above that range high tomorrow morning. And with this bearish move into this triangle, or call it a range, whatever you want to call it, I know the best opportunities are probably going to come with that two-try failure, right, to sell back down again. So as I always say, right, always go with the direction of the market's momentum. The market is bearish overall, but as you can see here, we're not making new lower lows any longer. We've got some higher lows, some lower highs. Sure, you might call this a trading range, right? A little trading range right inside of there. That sounds great to me as well. That range will also work as well. If you want to call this a trading range, mark up those range highs and lows, copy and paste. That gives you your range expansion. Make that a little bit smaller there. That looks good, right? And then bring it on down. It pretty much gives you all the same good stuff, right? So not that much difference there, whether you want to call it a range, right, or you want to call it a trend. We'll call it both, right? It's a range, right? But of course, for those lower highs, right, and higher lows, I'll call it a triangle. With the bears in control right now, I want to sell at resistance. And whenever I see a triangle, I always know the most reliable levels of resistance are going to be the swings, right? Those kind of turning points, right, on that triangle. Those are going to be our key levels here for tomorrow. Now, I really don't want to do much as a buy, so I want to look at these areas of resistance overhead. Those are where I'm really focused on. And again, anytime I have a range, I look for that two-try failure pattern. So basically, we want to get this price to go up. I want to see the price try to break out higher. I want to see it pull back. That pullback will likely now give those buyers a chance to buy the pullback. That constitutes now what I call a one try, two try. Once we see the two try for those buyers, now we know where their stops are, and we can sell right into those stops for a move back down to retest that low. We go up, one try, two tries, that tells me where stops are, and I can sell right into those stops. And if we're lucky on this, maybe we get even a bigger move up, one try, pull back, right? One try, get that moving average up. Let those buyers try it, one try, two try. We can sell into those stops, and if we get lucky here, we might get a chance here for what I call a hidden channel pullback pattern. Draw the lows, find the new channel there, and then we can sell off of that, right, off of that channel as well. So it'll be a two-try failure into a hidden channel pullback pattern as well. Another pattern to keep an eye out for tomorrow will be that two-legged pullback. It'll look like this. It'll go kind of stair-stepping its way higher here, right? That, of course, will then pull back, and we can use the underbelly of that trend line, right? That's always a pattern that we keep our eyes open for as well. So as you can see, if we can get this price to go up here, we look great. One try, two try, failure into hidden channel pullback, right? And we'll move back down into that range. Or maybe we get that two-legged move and we get that underbelly of that, right, of that trend line. Now, what if we go sideways here? What do we do then? If it sits here tomorrow, what do we do then? Nothing, right? We sit on hands, we wait for it, one try, two try, and back down. Well, what if price goes lower, right? What if it goes lower? What do we do down here? Well, I don't want to sell down here, and we're a little bit too bearish to be a buyer right now, right? So really what I'm trying to do is, if we go lower here, I'm sitting on hands. I'm waiting for this thing to really run lower. If it runs lower, it will probably set up with something like a spike in channel, find that new channel, and then we can look for those sells with a trap into a two try, right, into a failure back down again, right? Now, how about a buy side here? What would the buy side look like? Well, before I talk about the buy side, let me just bring this little gem into the picture here and just remind you that this is the situation we're dealing with right now. And you can see there's a very distinct pattern here. Every time it goes up, price gets sold back down. Every time it goes up, they're waiting to drag us back down. So before we start calling any reversals, right, before OPEC comes out and starts, right, getting us all worried about reversal, right, just remember, right, it's going to take a lot for this market to really turn direction. So even if we get a big strong jump up, it's probably going to be short-lived. One try, two try, and back down again, right? I would imagine you're going to probably see, right, quite a bit of that. So as far as that goes, I'm not opposed to being a buyer, but just be aware it's going to require a little bit of effort here on the bulls, right? The sellers are ultimately going to have to allow them to get control here. So what would it look like? What would a reversal look like? I'm not going to say we're not going to buy tomorrow, because we definitely might see it reverse here. What would it look like? Well, first of all, it starts with a strong move up. Right? It all starts with a strong move up. That strong move up then needs to pull back to the moving average. Right? Once we pull back to the moving average, keep in mind, sellers are going to be waiting here for that failure back down in, right? With that one try, two try failure. So we have to see some strength coming off of that moving average, right? What do we call this, guys? We call this the 1, 2, 3 reversal, right? And of course, it's kind of just like the name suggests, right? It's 1, 2, 3. It requires that three-legged move, or two legs with a pullback to the moving average. Now, what do we do from here? Once we see that 1, 2, 3 reversal, then where do we go? Well, now we wait for a pullback. And I know we don't like to wait. The problem, though, is if you buy up here, you're buying high. And you're not going to be in a very – it's difficult to buy high and still make money consistently in the long term. Let's put it that way, right? Very difficult to buy high every day and still make money. Yeah, you can get lucky every once in a while. But just like going to Las Vegas, right, sit at that craps table or the slot machine, you can get lucky every once in a while, right? Yeah, there are some jackpots, but – you're probably not going to get lucky all day, every day, right? Eventually that luck will catch up to you and the odds will catch up to you. So rather than trying to buy up here, right, let's look for that new channel, right? Mark up that new channel, mark up that high, and now we know where the sweet spot is, right down there, right? And now we can look for that pullback here, right, and be a buyer, right, off of that low. If the buyers can take control of this, obviously we're trying to go back up, right, and retest the 63 area up here. So that's easy pickings if these buyers can take control. And again, I don't want to say they can't take control, but we have to really be careful. trying to buy this market right now, because as you can see, a strong move in one direction does not guarantee a reversal. So we're looking at the two-try failure, right? Two-try failure. Don't forget two-try into that hidden channel pullback, right? Or we've got, if we do go sideways here, stay patient, back down, right? Or don't forget about that, right? That little two-legged pullback off that trend line. If we go lower, you got it, right? Find that new channel. We're going to sell up off the high of that channel. And then if we get the 1, 2, 3 reversal, yeah, find that new channel, and then we can look to buy right off of that channel. Real quick though, before we jump into our S&P here, I want to give you a deeper dive into all of those patterns, and really a much better shortcut than you'll find anywhere else. I cover all of these patterns in our video classes, and we trade them every day in our trade room at 8 o'clock Eastern time. But I want to give you kind of a shortcut here to learn all the basics of these patterns. That way you can follow along with me and really get the most out of our time every evening on our newsletter. And to do that, I'm going to put a free trading class in the upper right-hand corner. You'll see the little pop-up come across there. Grab that free course, follow that little link that just popped up there. I'll also put it right below the video tonight on our blog. It'll be linked up in the description on the YouTube channel as well. There's a big red button down there below that video tonight on the blog at Sideways Markets. Grab that free trading class, right? I'll see you in the members section, right? I'll give you free access to our members section at schooloftrade.com. That way you can learn all the patterns, all the basic technical analysis. Wait till you see it. You're going to love it. You're going to love it. I took a lot of time to create it, and I'm really thankful that I had that for you guys. So grab that free class, and I'll see you in that free trading course. That way you can get the real good stuff and not have to worry about going back through all my videos here right on my YouTube channel. All right, let's keep going. So now we know what the plan is. If price goes up, price goes down, price goes sideways, crude looks good. Next up, how about the S&P? S&P's bullish. Shocker, right? Could you tell? Yeah, we're bullish with a channel and a strong run higher today. The bulls definitely have the momentum. I don't think anybody's arguing about that right now. And that tells me to look for buying opportunities at support levels tomorrow morning. But as you can see, there isn't much to work with, right? We have a channel and we have a prior high. That's pretty much all we have right now, which reminds me, anytime we see a strong run like this, no pullbacks, just a strong run like this in one session, the following day is often a range or a flag. Now, if it's a range, it'll be a bull range, and so we'll look for the two-try seller failure, right? Two-try seller failure. If it's a flag pattern, then it gets a little bit more tricky. It's not that bad, right? But it's a little more tricky. If it starts to pull back, right, with a flag pattern now we want to look for what we call that breakout pullback pattern, right? That breakout pullback pattern. So there's really two basic patterns here that we're kind of anticipating here for tomorrow. Again, let's be honest, right? I mean, it's just a bull market. The problem, though, is there was very little pullback here, right? Usually when that happens, I mean, I would love to think that we're going to get a pullback and right back up tomorrow. I hope that's the case. Right? Hopefully we get a nice sharp pullback that gives everybody a chance here now to buy nice and low. I would love to say that's probably going to happen, but that would only happen in a textbook. This is one of those textbook channels, right? This is one of those channels that you're not going to see very often, right? These markets that just go straight up, like it's in a video game or something like that. This is not real life. This is just the reaction to the election. Markets obviously liked what they got, right? For whatever reason. I'm not here to interpret that. What I am here to say, though, is that in a perfect world, we'll see it pull back, right? It'll fool the sellers, right? The sellers will go, oh, look, we're bearish. They'll try to sell that pullback. That creates, of course, the one-try, two-try failure pattern for me, right? And I'm looking for that failure going back up again. Then, obviously, we'll mark up those highs, we'll find those lows, and we'll look for that hidden channel pullback pattern, right, going back up. So this is the dream come true scenario, right? This is the sunshine, right? Rainbows, unicorns, right? This is all like this is you open up day trading for dummies and yeah, just trade these channels, right? This is like the once in 10 or 12 months type of situation. Hopefully we get this, right? Hopefully we get that nice two-legged pullback, right? That nice pull back, right? The second try off the moving average, we can buy that failure, and then we can buy that pullback, right, off that hidden channel, right? Or maybe, right, maybe we get the two-legged pullback, right, which I call a two-legged pullback just because it kind of creates that trend line off those first two legs. It's one, it's two, right, and we're buying off that trend line, right? That's another option there. Again, but just don't get your hopes up, right? Probably not going to happen. If we get it, brilliant. If we don't, well, here's what's probably going to happen tomorrow. Strong move up, right? Strong move up. Usually when you have these really like weird kind of fluttering higher, the following day looks like this, where it keeps pulling back, right? It pulls back, doesn't retest the high. Pulls back, doesn't retest the high. See, all the buyers are waiting down here, right? The buyers are saying, come on down, right? I want to buy low, right? Give me a chance to buy low, right? That's what the buyers are waiting down here, right? And so of course you got people that take a nibble here. The problem though is it's too high to buy. Nobody wants to buy up here. It's way too high, right? We make money, we buy low, not buying high. So what happens is you kind of get this like sleepwalking, right? Kind of like zombie feeling market. The key is on a flag pattern, right? On a flag pattern, it's going to be very slow as it's pulling back. And it's going to feel like something's wrong. What's wrong is nobody wants to touch this thing because it's too darn high. But then eventually you're going to start seeing, you'll see buyers enter the market and it will jump back up. Now, you don't want to take that breakout here. A lot of the old trading books will tell you, take that breakout. And you can, and sometimes they'll work. But the problem is, once again, you're buying high. How do you know you're buying high? You're not buying at support, right? There's no support up there. Okay, where's support going to be? Support's back down here at the top of that channel. And so that's where we look for that pullback, and we look for that go from there. Right? Nice, good signal off that trend line. A lot of times the moving average will come over as well, right? And we'll get that buy off of that. Again, you'll get that nice, strong jump, right? It'll pull back, it'll settle in, and explode off that high. That's a flag pattern, okay? Now, remember also, too, is we talked earlier about the 1, 2, 3 reversal. This is not a bear market at this point. Remember, a market that runs up and slowly pulls back is still a bull market. It's trying to fool you because it's looking like a bear channel. It's a flag. Get above it, pull back, and go. What does a reversal look like? Remember, a reversal requires what? Strength, a pullback to the moving average, then what else? Strength off of it. That's the 1, 2, 3 reversal. Strength, pullback, strength. That is when now the bears have it. More accurately, though, it's the bulls have given it away. That's what's happening, right? Once we see those bears jump off the moving average, let's be honest, those are not, well, I'm sure there are a couple bears there, but the majority of the reason why this is happening, why it collapses, is because the buyers are done, right? They're walking away. They're cashing their chips. They're leaving the market. Right? And they allow it now to collapse back down. Once we get that, then we can mark up that low, mark up that channel now, right? And find that sell off the top of that channel, right? The little hidden channel pullback pattern we talk about. All right? So again, if we get that flag pattern here, just be aware. It's going to feel kind of weird, right? It's going to be slow. It'll be sluggish. It'll pull back pretty far, and then it will break out, pull back, and go. That's what I'm always looking for that flag. Now, what about the range? Well, when we have a strong move up, the market then goes into a range. Remember the key components to a range. 1 is the range itself. 2 is the directional bias, right? Buy. Okay. And 3 is going to be add the expansions. Take the size of this range, size that range, copy and paste it down, right? Copy and paste it up. Okay. That will create support below us. And that will create resistance above us, right? So size of the range down, that creates support. Size of the range up, that creates resistance. Okay, so we add those range expansions on, which I call range expansions, and that's the key, those range expansions. Go with the directional momentum, buy low because it's bullish. And how do we buy low? 1 try, 2 try. I really want to try to get that range expansion level involved there. It's not a must, but it's definitely a desired result. I would like to get that range expansion right included in there. Bottom line is I want to see 1 try. I want to see 2 tries, right? We'll go into a lot more detail of this two-try failure pattern in that free trading class that I talked about earlier. It's right in the upper right-hand corner. You'll notice that little information icon up there. It's also right below the video tonight on the blog. So you'll learn more about this pattern, but a one try, two try, right, and then back up we go. What we'll do at that point is we're looking for that buy, again, after that one try, two try, look for that buy there, target one back at the high, and then target two opposite side of that, right, opposite side of that range expansion. All right, guys? So if we get the range going here, right, and it may not happen until we get to that prior high, right? As we go up, we may see that prior high at 24 and a quarter, which we talked about last night, right? That prior high may be then what sends price sideways. If we get price sideways, one try, two try, back up in, right? Back up in. The bottom line is that all we need is a pullback right now, right? Like I mentioned earlier, maybe we get this little pullback, one try, two try, right? One try. That's a horrible joke. One try, two try. There. Come on, really? Bob Ross is disappointed, man. Right? One try, two try. We may get that one try, two try, right, into that failure, into that hidden channel. I hope we do. But what's more likely is we get that range, right? Get that range up here. One try, two try, back up, right? Or right, we end up getting that flag pattern, and we end up buying above, right, for that flag. What if price keeps going higher? If price keeps going higher, we're just waiting for it. We're just waiting for it right now. It's a little bit late to get aggressive, right? We talked about getting aggressive last night on the newsletter, you know, when to get aggressive. It's a little bit late to do that right now. Everyone's waiting on a pullback, right? And it'll probably go sideways tomorrow. So keep an eye on that. We get the FOMC announcement at 2 o'clock, so make sure you get those trades early. Right? And don't force it, right? Don't force it. These markets can be a little bit tricky. What does the reversal look like? How does the market reverse? Strong move down, pull back to the moving average. Yep, strong move off. 1, 2, 3, right? 1, 2, 3. Got to jump off that moving average. Mark up that low, mark up those lows, bingo, and we're selling off the high, right, of that channel. I'll tell you right now, if this thing turns bearish, right, we'll probably end up tomorrow back around that pre-election 2745. I would imagine that'll be easy if this thing turns bearish tomorrow. And again, FOMC announcement tomorrow afternoon. So who knows what may in store here for tomorrow night. So make sure you tune back in tomorrow. And again, we're going to trade this together tomorrow morning in our trade room, same time, same place. How about the Nasdaq here? Nasdaq is very similar to the S&P. We're bullish, but it looks more like a wedge on this chart tonight. Get a wedge, get a measured move, and a hidden channel on the chart here this evening. The bulls definitely have the momentum, right? And with this wedge getting narrower and narrower, it's that wedge I've got up here, right? With this wedge now getting narrower by the candlestick, we know we're running out of space to trade inside the wedge. That's the problem with wedges. When wedges get really narrow like this, we typically can anticipate now a nice, big, deep pullback, right? And that deep pullback is really just allow the buyers just to free up some space because there's no space in here, right? There's very little open space in there. And, you know, the psychology of the market would, you know, make sense, right? If there's no space to trade, then people are going to stop trading up here. When people stop buying up here, price will pull back. When it pulls back, the buyers, right? The buyers are going, yeah, Yahtzee, right? Let's do this. Let's buy this thing back up. At the same time, the sellers are going to think this market's bearish. They're going to try to sell that pullback, and we're going to look for that rally going higher. Now, you might notice what I'm using. I'm also using, if I draw a trend line off of those highs and then bring it down to this low, you'll notice this kind of creates like a little hidden channel here. I hope we get a chance to use that tomorrow. It's such a strong move, though, that we may not get that deep of a pullback, right? It may not pull back that far. I hope it does, but we may not get that just because there's so many people right now that are waiting for that pullback. It may not pull back that far. So you also want to keep in mind, as I said back on the S&P, whenever we see a strong move like this in one session, the following day, look for a flag, look for a range, right? And always want to keep an eye on that as well. So as we're going higher here, the wedge gets narrower, right? The wedge gets narrower as we go. And remember, where this wedge comes together, right, becomes kind of the big wedge target. So you'll notice we got that target right around that big juicy 7,300 level. Okay, so that looks like where these buyers are hunting for. And usually those wedge targets are pretty reliable, and of course they become major levels of resistance. One thing you want to think about though is that when we do have that wedge, let's put that resistance up here real quick. When we do have that wedge, real quick here on this, a lot of times what will happen is we get that little wedge, right? Once it gets narrow, we get that deep pullback, right? Deep pullback goes back up to finish off the wedge top, right? That wedge target. So we're obviously looking for a buy down here, right? But don't forget too, when we hit that wedge, this wedge target, oftentimes that momentum is really strong. And what will happen is we'll see some profit taking, and you can usually find a trend line over here, right, or something to use there, and usually you can find a buy off that one too, right? So that will also be something to keep in mind, right? So let's kind of walk that again, right? So we know where we have, right? We know where we have that wedge target, okay? We know that we're hoping for that run up, right? Looking to buy down here. We're hoping to get that run up, or maybe it comes a little bit later, right? Maybe it comes a little bit later, whatever. I don't care when it comes. I'm just waiting to buy that pullback. But once we get up to that wedge, right, don't be surprised if we also see it pull back and do it again, right? Kind of that bounce off the wedge, and buyers come back in and go, perfect, do it again. Okay, so we could see a couple different opportunities here, buying nice and low tomorrow morning. So a couple different things we want to keep our eyes open on, right? As we go higher here, we're getting pretty narrow. So I definitely want to see us pull back. As we pull back, I would love to get that sequence here, right, with a 2-try failure into hidden channel pullback, right? That would be a dream come true tomorrow, right? It's a 1-try, 2-try failure pattern, which you'll learn a whole lot more about inside that free class in the upper right-hand corner of this video. Then, of course, you get your hidden channel pullback pattern, right? This is nothing new. We've talked about this many times already today on this newsletter, right? I would love to get that pullback, right, and get this thing running back up to retest the high. If it keeps going higher here, same thing. We'll look for the same thing, right? Same plan, just to be at a higher price. However, right, again, whenever we see this market go this far without much of a pullback here, the following day oftentimes becomes a range. So keep your eyes out, whether it be here or up around that measured move. Keep your eyes out for a double top, right? This is not easy. I'm gonna be very upfront with you right now. When I was a rookie, like a lot of traders, it was overwhelming. There was so much to keep track of, right? Try to watch everything at once. And it's very difficult. Well, let's put it this way. It's very easy when you're a rookie to get so wrapped up in looking at everything that you don't see that range. Maybe it was just me. I don't think it was just me. I've learned over the years that just keep watching for those double tops. Keep watching for those double bottoms. Like I said, it's not easy. You know, when you're a new trader, it's like being a new driver, right? You're trying to learn. You're trying to watch everything, you know, rather than just kind of letting it flow, right? That comes with experience behind the wheel. As a trader, though, when we're bullish like this, you got to keep your eyes on those double tops, right? Because when you see a double top, that tells you get a range. And once you see a range, then you know you want to buy below that range, right? You want to keep trying to buy high. You do that, it's 1 try, it's 2 try, and then back up in, right? Kind of an interesting situation you can see right here. There is a double top right there. That is a small range, and I'm sure on a small time frame, it went once, twice, and back up, right? So as we go higher here, watch for that double top. Once you see the double top on the chart, and again, it could be up here too, right? It could be up here. We may go up into that double top. It doesn't matter where it is, but once we see it turn to a range, 1 try, 2 try, right, and back up from there. Let those bears try once, let them try twice, and then once we see them, once we see the second try, then we can look for that move going back up to retest the high. And again, that wedge target is where we're thinking. And then again, as I mentioned earlier, keep your eyes open here for a possible flag, right? Maybe the flag kind of moseys its way down here. Yeah, maybe that flag kind of moves way lower. Get that flag buy off that low here, right? I mean, who knows? Maybe the flag's even more dramatic tomorrow. Maybe it does something like this tomorrow, right? Where it includes this trend line, right? This channel. You know, it looks like a pipe dream right now, but we might just see it, right, using that channel low tomorrow. So that's something to keep in mind towards the end of the morning tomorrow, right? Keep that in mind for tomorrow as well. So flag patterns are pretty. I would expect that tomorrow. Range pattern tomorrow, or again, right? One try, two try, failure, strength, hidden channel, right? And then back up. That will be great. And then don't forget, if we keep going higher here, just stay patient. Stay patient. Wait for it. Wait for it. It'll come back, right? It always does. And don't forget, if we run up to that wedge, stay patient. Wait for that one try, two try, right? And we'll try to get it right back to do it again, right? A lot of times what'll happen is you'll see it just run up in the pre-market, and you're going, oh man, what are we doing now? Look for a range up here, right? Range, one try, two try, back up, or, right, look for that pull back and the run back up to do it again. And again, we get a bunch of different entry patterns that we can use on that, which we've talked about already in quite a bit of detail here. And again, we cover all those entry patterns, right, in that free trading course. Last but not least here, how do we turn bearish? What's a bear market look like? Strength, first of all, pull back to the moving average, right? And then, of course, next, strength off the moving average. Okay, do not be the one to try to call that reversal because, right, a lot of times those are where the buyers are coming in right into that seller failure. So don't try to be a hero on that. I know it's tempting to want to call that reversal, but it's not a reliable trade. Find that new channel, right, and then we're selling off the high of that channel, right? Trying to sell off the high of that channel. That's the way to do it, right? That's the way to do it. Okay, pretty easy. Pretty easy. Just wait for the reversal. Wait for that 1, 2, 3. Then you know where to look for that trade going short. Where's my target at that point? Yeah, again, like the S&P, right? My target is pretty much right back where we came from, right around that big, fat, juicy, round number at 7,000 on the Nasdaq. All right, let's keep going here. We got a lot more to cover here. We got gold and euro to wrap things up here tonight. How about some gold? Gold is bearish with a triangle and a spike in channel in the chart this evening. The bears have control after the buyers failed to retest the monthly highs, and this strong momentum going lower looks like a spike in channel, which is important because spike in channel patterns always tell me to stay patient and wait for a bull trap or a buyer failure up above those highs tomorrow. Boy, I'll tell you, the gold definitely wins the award right now. It gets the ugliest chart of the month so far. I mean, good gosh, ever since the first of November, this thing has just been a terrain wreck, right? It's been a mess. The good news, though, is it's been pretty easy to trade. For the most part, we had this range, and every time it went down, we kept buying it back up. So it's been pretty easy to trade so far. But now things appear to be starting to change a little bit here right now, right? They definitely appear to be widening out, and it looks like we're probably going to be in transition right now, right? And it looks like we're going to be going into a triangle here is what it looks like. If you zoom out a little further here, right, you'll notice we got, you could draw trend lines off those highs too. So it's looking like we're starting to get it comfortable at a little bit lower price here. And so we definitely have this thing in a range, right? And of course, what does the range tell me to do? It tells me to buy low. It tells me to sell high, right? It tells me to focus on failures, right? Failures, one try, two try, failure pattern, one try, two try, failure pattern, right? That's what it tells me to do. But there's one more very important clue here, and that is, what is the short-term momentum right now? And this is something that you're going to be probably sick and tired of hearing me say, right, after watching my newsletter for a few weeks, and that is, always ask yourself, what is the direction of the market's momentum, right? I call it control. Who has control of this market? But for most people, when I say momentum, that's easy to understand too, right? If you were to guess right, just guess right now, look left, in the last 24 hours, right? Most recently, what is the most recent momentum right now? It's bearish. You can easily see it went up and now we're collapsing back down. So we're obviously in a slightly more bearish than bullish environment right now. Now, with that said, knowing the momentum in the short term is bearish, my edge is on the sell side. So where can I sell? Well, now we got a great looking pattern, a spike in channel. Nice strong move down into a channel. This may also be a wedge too. It may also be a wedge, kind of like the opposite of what we saw on the Nasdaq. Now, we talk about this pattern all the time because this is one of those top 5 chart patterns, right? This is one of those patterns that you really want to learn as soon as you can because we see these patterns quite often, right? It starts off with a strong spike, right? A strong one-legged move down, doesn't pull back, strong spike down. Then we pull back and bears sell it, and it creates this channel. Now at this point, the market starts to get a little bit too low. Sellers don't want to sell very low anymore. So what do? They start looking for a chance to sell high. Here's where the magic happens. Take out your line and go looking left. And right where the base of that channel, right? See where this channel intersects with that spike? That channel in combination with that first pullback, that creates what we call the sell zone, right? Or the battle zone. That's not how you spell zone, right? But that creates, right, that sell zone overhead. Now all we do is wait. I wait for that price to go up. It'll almost always feel like it's going to reverse, right? This move higher will almost always be scary strong. It'll feel like the market turned bullish, which is a good thing because the moving average will come over. The buyers will try to buy that pullback, and again, they usually look pretty convincing. But not to worry, it'll almost always collapse right back down to that low again. We call these spike and channel patterns. And again, if you take me up on that offer for that free trading course in the upper right-hand corner or below the video tonight on our blog, you'll see a whole lot of examples of those patterns right in our free trading course because they're very, very common and they're very, very reliable. Okay, so we have a bear momentum. There's your spike and channel. Where's the base of that channel? Yep, it's right up there. Okay, now I'd like to get a little bit higher than that personally. I'd like to see us go up, 1 try, pull back to the moving average, 2 tries, and then back down in. That would really be the ideal, right, scenario, right? Let this thing go up once, let them try to buy the pullback. Now we know where the stops are. We can sell into those stops. And then if we can get lucky on it, we might get that hidden channel pullback. Sometimes these just collapse and we don't get that secondary pattern. But there's your 2 channel, right? Your 2 try rule, your 2 try failure, right? Into that hidden channel pullback pattern. 2 great opportunities there to sell if we can get that pullback. Now, another thing you want to think about tomorrow is what if we just go sideways here, right? So what if tomorrow's FOMC? And one of the things you want to remember is that gold is one of the most difficult markets on FOMC. So tomorrow might not be a very easy session. It may sit here and kind of just get all lazy, right? Like Sunday morning lazy. If it sits there going quiet, that's now going to give us pretty much a balanced momentum, right? Because right now it's very bearish. But if we just kind of settle in here and start going sideways, you're probably going to be able to trade both sides of it, right? If it sits there for a few hours tomorrow morning and we're not seeing it jump, well, what I'm thinking now is I want to see it go up fast, 1 try, 2 try, back down. If this thing just goes sideways here, it'll pretty much be an equal opportunity market tomorrow, right? If it keeps going sideways tomorrow mid-morning, at that point, it'll be 1 try, 2 try, back down. Let those buyers try once, try twice, and then back down. Or, right, the exact opposite, right? 1 try, 2 try, back up. Right? Typical 2 try pattern, typical 2 try failure pattern. Stay away from the middle, buy low, sell high. For now, though, in the short term, definitely keep your eyes open, though, for a sell up around those highs. And then if it sits there sideways tomorrow, then obviously we know we're neutral tomorrow. Again, tomorrow, FOMC day, get to it early. Hopefully the FOMC announcement tomorrow afternoon at 2 o'clock will shake this market out of its funk right now because it's definitely been a pretty consolidated market lately. So hopefully tomorrow will be the end or the beginning of the end there for that range on the gold. Now, last but not least here on the euro, euro is bearish with a strong move lower, a hidden channel, and a wide bull channel on the chart this evening. The bears have the momentum after price collapsed off this morning's high, and that tells me this strong move lower, right, this strong move lower you're seeing right now is probably not sellers, it's probably buyers getting out of their positions, which is important. because it kind of tips us off as far as the psychology of this market, because eventually there won't be any more sellers getting out of this market, and price will need to pull back to attract some real sellers right in up at a level of resistance. So this is likely buyers getting out. I'm waiting for a pullback because I know sellers are likely waiting up here for their turn, right, to take a spin of the wheel as well. Now, what's also interesting here is if I zoom out on this chart right now, you can see we have what is probably going to be looked at as a channel, right? It's a very wide channel. Okay, now wide channels are tough because, well, first of all, the market's going to be bearish by the time it hits that wide channel. You know, for example, back here, right? Market's bearish by the time it's below that channel. It wasn't a channel back then, but roll with me on this, right? So let's say we do go all the way to the low of that channel. You can't buy that now. You've got to wait for it to go back up and then buy the pullback and go from there. So one of the most difficult parts about wide channels, you know, narrow channels are easy because momentum doesn't get a chance to build in the opposite direction. A wide channel can be tricky because we have this, again, I've got this as a strong collapse off the high. I don't want to sell down here. I'm going to mark up those lows, mark up that high, and my goal is to sell off of that high. Now, don't let this bull channel fool you. Okay, the market will be bearish as we go lower to this. So at that point, it's either sell or we've got to get back going up before we can start looking to buy that low. That's why I mentioned this, because I want to make sure you're not going to make that rookie mistake that I made many years ago and say, oh, look, we're at the bottom of the channel. I better buy down here. Probably not going to be a very good idea. So be very careful of that. This will be some support down here, but it's probably not going to be that big of a deal. We'll probably find our way through that support. Wide channels, do not trust those lows because this momentum is going to get loaded up and dump going lower, and that's not going to be enough most likely to stop these bears going lower. So we're definitely bearish after that big run up and that collapse back down. I'm looking for a pullback right now. I've got my eyes on this hidden channel. That looks like that's a good fit right there. And of course, as we go higher, we'll be above that moving average. I'm looking for that 1 try, 2 try failure pattern into that hidden channel pullback, right? Into that hidden channel pullback for that sell back down. Or maybe we get the 2-legged pullback, right? We get that trend line on, right? 1, 2, and we sell off, right? The trend line. Hey, that could also be a failure pattern as well, right? So that's could all really line up together there. But the key right now, though, is who has control of the market? What is the market's short-term momentum? We're bearish. I want to sell at resistance. Are we at resistance right now? No, we're not. Where's resistance? Up at prior swings. Up at the high of that channel, that's where we want to sell, right, going back down as we go. And then from there, I'm going to try my best to use this channel, right, as we go lower. Let's just say we do get that breakdown. I'm going to try to use that channel, not as support, but as resistance, going lower, right? That'll be the plan as we go lower. Now, don't be afraid, too, if the market turns bullish, if we do get that sell off the high, we stall out, right? Look and see. Maybe they do hold the low of that channel. It'll be a small miracle, right? But if we do, strong move up, pull back, and we'll go from there, right? So that will be our opportunity there to buy if we get the return off of that low. But be very careful trying to predict that at the actual low of that channel, because those wide channels, right? Those wide channels will allow that momentum to turn, right? Wide channels are a lot more tricky, right? Because wide channels will allow that momentum to build for the bulls, but also for the bears, right? By the time we get down here to the low of that wide channel, right? That's a lot of bearishness here, right? As opposed to a narrow channel. And a narrow channel, right? You could be a lot more aggressive with a narrow channel because there's never going to be any bear momentum. All right, guys, so keep it in mind. Don't worry too much about that low of that channel. Use it as support for your targets. Use the resistance to keep going lower. And if we do get that rally off of it, wait for that turn and buy that pullback. We're looking great here, guys, in the euro. Get a great plan of attack for tomorrow morning session. All I need is you. Tomorrow morning, we open up at 8 o'clock Eastern Time, bright and early. We'll have a front row seat for all tomorrow's morning's news. We get a great plan, a great trade room. I've got all my cheat sheets and checklists ready to go for tomorrow morning. If you want to learn more, give me a call at that toll-free number. Check out our beginner, intermediate, and advanced classes on our website. I've got a great free trial. It's linked up in the video description. It's also in that information icon in the upper right-hand corner on the YouTube channel. Guys, thank you so much for being here. Always a pleasure. Hope you learned a lot. Hope to see you tomorrow morning so we can earn a lot together. And I will see you guys tomorrow morning, 8 o'clock Eastern Time. If not, same time, same place tomorrow night. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.